Hey everyone, microphone check, screen check. Yep. All right. Welcome, welcome, welcome. As always, we're going to be jumping into to the markets and seeing what all is going on here. We're going to be looking at what's happening so far, and yeah, going into what we're projecting to have happen tomorrow. So it should be kind of an interesting one. We've had a decent amount of movement so far today as well. So a lot of it was back and forth, but hey, some movement's better than none, right? So before we jump on in, as always, make sure to swing it over to slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter. From here, you're going to be able to register for our email newsletter list. You'll be notified every time one of these videos comes out. Along with that, in the email, we talk about a bunch of stuff that we don't have time to talk about in the live stream, and that's going to be everything from, well, stocks, options, crypto, you name it. If it's moving, it'll probably show up in there at some point. So make sure to get on that bandwagon if you haven't signed up already. Give me 1 second here. I got to tweet out the stream, right? Make sure everybody knows what's going on. Bandwagon if you haven't signed up. Let's see here. So this is the second time around that we've been doing these. So again, as always, it might be a little bit shaky, but we'll get there. All right. So along with the Outlook video newsletter, make sure to also click on the live trade room subscription and trial info. From there, you can register for a free 3-day trial in the live trade room. You can hang out with us for a couple of days and see what we're all about. It's a really good way to kind of hang out with us for a little bit, ask some questions, and just kind of see what what we're doing and how we approach the markets. So if you haven't done that already, make sure to sign up for that. Now, taking a look at the markets, right off the bat, we've got some pretty interesting movement. Euro is first up on the list, and we are getting that bear movement to the downside that we were talking about yesterday. The bears, for the most part, the bears seem to be definitely taking some control. It was a little bit of a concern when we came in this morning in the live trade room, in that, they had a weak little failure down here. It did end up closing way up there. The next candle stayed inside of the top of that, or the bottom of that wedge. We had a little bit of a bull bar. They tried catching a lift up. All they managed to do was hit resistance, and it broke down very aggressively afterward. We have now finally broken down to that major support level we were talking about at 23,270, and we're seeing a little bit of bouncing. This area, especially if you zoom into something like a 5-minute chart, we can kind of get an idea as to how this bouncing is taking place. But 23,270 is an area that a lot of traders who have been short for a while, or, short, maybe they're looking to buy, etc. They're all going to be looking to take profit or jump in at around this area. And you can see how much chop and slop has happened here. Lots and lots of profit taking on the initial hit, bounced right back, came back, chopped around, made a new low, bounced up, came back. You get the idea. So this area so far has been very, very choppy. But that said, looking at this drop that we've had so far in the euro, it has come pretty aggressively down, meaning that we have an open gap between the two, right? The swing high to swing low, we have broken down very aggressively, showing that we might have a little more downside pressure here. So even though the 5-minute chart has obviously a lot of action going on at 23,270, it doesn't necessarily mean that it's done, because a lot of times with this type of move, you can measure from either the top of the breakout or just take the box that we just drew up and look for downside objectives. And right now that creates a downside objective anywhere between 23,186 down to 23,035. So there is still plenty of potential downward momentum that could be taking place here on the euro to kind of kick the market down into some of those larger objective areas. Actually, that's just on the 5-minute chart, so we don't want to keep that on there. But that's kind of the area that we're looking at right now. And the situation that we found ourselves in on the euro has a very aggressive breakdown, and obviously a lot of traders are going to take profit on that big move down. It makes sense. But, overall, is this objective enough to stop the market, or are we going to be looking for larger targets? The overall down move with that AB equals CD move, it puts a support level way down there at the bottom of that 3-push wedge bottom. That's still a long way away. I mean, we're definitely getting some nice bearishness, but we've got a lot of ways to go here if we're going to start completing some of these objectives. One of the big things that stands out to me is still from yesterday, this kind of culmination area, looking at, If we zoom in a little bit closer here, 22,745 down to 725, and that's a mix of the 100% deviation down as well as the low closes and opens down here to find some traders who are looking to take a little bit of profit, maybe jump in, etc. So the downside still looks pretty good. Euro's breaking down, and it wouldn't be a surprise with such an aggressive breakdown to see a little bit of a pause. I can't blame anybody for taking profit, right? So with a move down like this, anticipating a short kind of bouncing area for a little while on that zone and then continuation lower is definitely where the probability lies. Now, the overall move, there isn't really enough consistency to add any new levels of support or resistance. Nothing really standing out there. So, I mean, in terms of the way that the euro is kind of responding or moving in this location, it looks as though, you know, the bears definitely own the market, and they're probably just looking for some better prices. One hot spot area that I am going to be keeping an eye on is this breakout swing low that we've left behind. We dusted that area on that smash lower, and if we can get a quick little snap inside of there for a retest and push back down, wouldn't look half bad for a little more of that selling pressure to jump back in and shove the market lower. And again, as you remember on the 5-minute chart, that is also kind of filling in some of that gapping that we saw on the faster time frames. So everything looking really good to the downside. There's not really much else new to add. Just looking for more bearish continuation to the downside on the euro. Over on gold, we had a little bit of a hard time here. We had an upward objective. This was that bullish move up, expecting a pullback and looking to buy into it. But like we were saying yesterday, when you have this type of exhaustive move, the pullback tends to be a little bit bigger than you would originally think it should be. You know, a lot of traders are going to want to buy into a 25%, a 50%, you know, half back, something like that. Some of these previous levels of support or resistance, etc. But with that amount of exhaustion, it might get a little bit deeper, and now we're finally getting that deeper move. This is what we wanted to see. We're getting a pullback to the beginning of where this big bull leg started. It kicked off and ramped all the way up here, and guess what? The market came back to retest that starting point, and the buyers are defending it, and that is a very strong clue that buyers so far likely buying into the move with a really, really tiny stop and a huge target, potentially all the way back up to those highs at around 48.8. So there's a lot of upward momentum and a lot of upward just possibility, for lack of better words. Really, really teeny tiny stop that the buyers have to offer up in order to get a huge rally potential. I mean, the risk reward on something like that's like 6, 7, 8 to 1. So buyers are definitely buying into it. They know that it's low probability, but so far they're probably feeling pretty good about that. So, right now, with that nice bounce off of 33.3, that does mean that that level has been tested and confirmed. So we'll mark that as a dash dot level so we know that it's been tested. In terms of levels of resistance, there's not much that we can really add. We still are looking to complete the objective at 50.3, as well as looking to test 48.8. That's kind of the big one. That's why it's a big, thick orange level. For the most part, though, everything is pretty straightforward. There's not really much else that we can do here other than looking to buy into this pullback and continuing for a rally up to try to finish that objective at 48.8. So in the overnight session, really, if we can get another pullback to around 33.3, we're probably going to be able to find some scalping opportunities off of that. But even then, after the scalp, you might still be able to hang on to a low probability, but a strong reward versus risk rally to the upside. I mean, you're talking 6, 7, 8, maybe even 10 to 1 on the reward versus risk. A lot of people like those kinds of odds. Over on crude oil, coming down and testing that major area of interest at 62.85. That was the low of the channel, the 200-period moving average, etc. That's also kind of back at that cluster area of support we were talking about yesterday. It's a little bit above that, but we are still in that zone. Really, right now, the anticipation is that the sellers are going to continue down with one more leg, and 62.85 is going to be that area that sellers are looking to retest. Now, a retest of these types of swings, it might be a quick little shallow tap like we had up here, and then a failure all the way back down. It might be another big bear leg lower. But for the most part, we are still in corrective phase and looking for a little more continuation. From the top, if we look at this as an ABCD move down, since we've had this a couple times already, we can see that an AB equals CD, if I thicken this up, make it a little easier to see here. Try and get these in a thickness of 3 and 3. We can see that that drops down into our 4-hour support from back here at 62.62. And notice that is a resistance, support, resistance, support, 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 resistance. It's a big area. And the fact that the AB equals CD move lands directly on top of that, it seems like a pretty obvious objective to the downside for the sellers to be gunning for. I still think sellers are building into positions, and they're probably going to be building into positions all the way up unless it breaks the highs. That would be the point where they're truly wrong. But for right now, a lot of sellers are going to be selling this big bear bar. They'll sell down here. They'll sell this bear bar down here, knowing that when it starts correcting up, they'll sell above bars, they'll wait for a strong bear bar, etc., and they can push everything back down to retest those low closes at around 62.85 to finish that objective and kind of bounce that off as an area of support. And again, you might even be able to find some scalping opportunities there as well, but downside objectives are still open, 62.85 down to 62.62, and that means that overnight session going into tonight and this afternoon, and maybe even tomorrow, keep in mind, tomorrow is inventory day, looking for that bearish continuation to the downside. A couple things that we do want to keep our eyes on, though. If we start seeing this low swing fail, notice how they're holding it as resistance. If that starts failing for more than a couple candles, you know, it can close a candle or two above that, that's fine. But if it starts really staying above it, that down move loses almost all of its probability. So right now the probability is very high that the market retests those lows, but if it starts cracking above that previous swing, we might be running into some trouble. And then over on the S&P, don't say we didn't warn you. We had a beautiful move down and a bounce off of that major support. That was a deviation low at 25 at 62.75 down to 61. That was also the bottom of the 3-push wedge low, and that was also 4-hour support coming through there. So everything stacking up in the same place. Not a surprise at all to see a correction back up. The level really that I want to see here now, now that all of this stuff is done, we've already had the major bounce that we were looking for on the S&P, is looking at this previous swing. This previous swing low down here, and actually, I wish that I can get it kind of close. Let me see if I can just just do it like that. 86 and 86, I believe. We'll make this a big thick line. This is going to be the area of interest. And the reason for that is we had that potential of a mid-peak trap. If you remember, we were talking about that yesterday, where the market comes down, traps that area, and tries rallying higher as long as it doesn't break that low. Well, we broke that low. But the problem is, when the sellers tried to come back in and sustain that low as resistance, they had a nice bear bar, but nobody showed up to the party. It didn't even trigger underneath that bear bar, which is where a lot of sellers likely were waiting. You know, have a sell order waiting underneath that bear bar, let it kind of swoop you into the trade and drive lower. Didn't end up having that. So with that lack of conviction to the downside from the sellers, they have now broken back above. And with that break back above here, this is where it starts getting really interesting. What do they want to do? Do they want to keep this going down and retest that objective at the lows? Or are we running into a situation where buyers are trying to take control after this seemingly exhaustive bear bar? Little bit of a kind of a level of confusion, and we definitely saw that in today's price action, especially over the last 4 hours, well, last 3 hours. I mean, look at this candle, right? It's a huge engulfing candle, but what is it? It's just a doji. It's a bear candle for a little bit, then a bull candle for a little bit. It's done nothing. And I think a lot of that confusion definitely stems from the fact that we're chopping around this previous swing low. Sellers really want to see it close underneath that low. Buyers are going to do everything they can to try to prevent that from happening. So just kind of waiting for what this current 4-hour bar does. You know, this is going to be our clue. So a 4-hour bar closing strong. I don't want it to close looking like this. I would prefer to see it close down here. Then we're looking for a retest of the lows with a very high probability. However, if we close the candle looking like this, well, we've got some problems. The sellers aren't taking control, the buyers aren't taking in control, so we have to start treating it more as a range where we're looking to buy low, sell high, and stay out of the middle. And right now, given that it's a doji, it's pretty much smack in the middle. So I think it's a little bit of a waiting game for crude oil. I'm sorry, the S&P right now, where you know, we have to wait and see what they want to do. Do they want to try to close it down? Do they want to close it up? Fail to close? End up closing as a strong bull bar? I mean, there's a lot of things that can happen here. But for right now, it's just a huge amount of confusion. So lots of up, lots of down, and not really much direction. For me, basically what that means in the overnight session, talking about trade plans for tomorrow, a lot of times when I see candles that look like this, I mean, we still have 45 minutes and a lot can happen, but I start thinking, I might want to ease off the gas pedal a little bit here and let the market tell me what to do. Right now, you know, I'm still looking for a retest of these lows. That would be an area of interest for sure. But, you know, aside from that, it's going to be a little bit tough. And right now, we're definitely not getting a strong amount of confidence for the sellers or the buyers right now. So that means that we're sitting on hands and waiting until the market gives us a little more info. So we'll drop that back there. Now, some of the other markets that we can take a look at as well, looking at the bonds and the Dow and the Nasdaq, they tend to do the same thing as the S&P. They are fairly correlated. But for the most part, looking at something like the bonds, which has been catching a decent amount of upward lift, is showing that, well, we cycled off of resistance at 147 even, driving back down with a heavy amount of sell pressure, right? The primary objective for the sellers on the bonds was to stop at 146.15, 625. I hate these 30 seconds. But they just cruised right through it. They went pounding lower. So with that amount of bearishness, even though we are coming down to the bottom of that descending wedge, right, the top of the ascending wedge rather, we're coming down to the lows of it. Am I really that keen on jumping into the buy side when I have back-to-back-to-back 4-hour bars breaking through levels of support? Probably not. I don't necessarily want to be the first one to the party on something like that. It's a little bit dangerous in my for my taste. So what I would rather see here is really just a secondary attempt. If the buyers are going to take it, we should see something like this where they pop up, pull back a little bit, trap in some sellers, and then get the continuation pop to the upside. So until I see something like that, it's going to be really tough to want to do much more than kind of sit on hands and wait for the bonds or look for the next level of support, which is just below us at 145.68, 750. I think that's 145.23 or so. I hate those 30 seconds so much. But that's kind of what we're looking for in the bonds right now. Nice pullback off of the highs, nice level of resistance being created at the top with this big bear push down. And this is kind of a multi-level of resistance, mainly just because of the fact that we had buyers that probably bought above that little bull bar. Well, they're still holding the bag, and if they're still holding that bag, when the market comes back, they're likely going to want to exit at break even, maybe build into some positions down here. A little bit of a mix. So on the bonds, we're still kind of waiting there as well. Not much we can do. So let's take a look at some of the markets that we were looking at yesterday as well. We were talking about soybeans. So ZS 0518. And we'll take a look at a 240-minute chart. Should be fine. Let's go back a little more, though. How about 90 days worth of data? We'll get our 60-minute anchor chart. So we are seeing that pullback. They did pull back to retest that major support, 1036.75, and that was the area of interest that we kind of marked up yesterday, elaborating on how important it is to stack levels, right? And the reason I want to go back to this is to go and kind of further solidify the point of how important it is to stack those levels in your favor, right? We were saying yesterday how, this level specifically, out of all of the levels that we marked up, held the best. And not only did it hold the best, it was also a culmination of a 50% test. It was also the moving average support coming into play. I mean, everything's stacking up in the same place, and that's why you look for that amount of support, because guess what? X marks the spot, right? That's going to be the big area of interest, and the market definitely did have a nice rally off of that for the day. So more, not necessarily looking back over and saying, oh, you should be trading soybeans right now, but this is why it's so important to cover those areas of support and make sure that it lines up with other things. The more things that you can build onto a point, the better, right? It adds more and more and more people looking at the exact same level, looking to do the same thing, and you usually get a halfway decent bounce. In this case, off of that level, I mean, we'll just take it from the close to the top there. We're looking at, almost 12 points on that lift. So good amount of bullishness off of that move. Now, where it stands, we have an attempt for the buyers to really try to come in and shove the market up. It never actually triggered the buyers in, and it's starting to pull back on itself a little bit. And if we look at the kind of intraday candling going on here for the soybeans, soybeans does have a lot of back and forth going on today, but for the most part, it's still directionally up. So, this most recent 4-hour bar looks really, really bearish, right? It's taking back everything the bulls did. But in reality, I mean, is it really that bad? If we look at this overall move up, we can see that this really is nothing more than just kind of a weak ascending wedge-ish, and that usually means that traders are looking for deep corrections, right? Pulling back 60, 70%, maybe even a little bit more to buy into the move before it goes back up. We're seeing these deep corrective swings. So this could be nothing more than just a deep corrective swing before another rally back to the upside again. So I haven't really lost hope with the buyers. I think they definitely have a shot at catching the move up, but this isn't what the traders want to see. You have a strong bull attempt. It went bull engulfing, and then nobody shows up, right? Where did all of the buyers go? So that might lead us to believe that, hey, even though we have a likely objective up at the highs here, we might be dealing with a situation that the market has to pull back a little bit further, maybe even retest 36.75 before we get that secondary bounce back up. So a little bit of chop and slop here going on for soybeans, but for the most part, not a bad looking day. And then of course soybean meal, one of my other favorites. Soybean meal we were also talking about yesterday, and how it kind of moves, and it moves very similarly to soybeans, and we're seeing the exact same thing here, where we have an attempted rally up, and that the buyers did trigger in this case. The buyers would have bought above that bull bar, and so far it has been pretty much a failure. Now, when I say failure, to me, I look at this thinking, okay, well, we have a giant bull bar. Why would I want to buy above a giant bull bar? An engulfing candle like that? Most of the move has already happened if I'm on a faster time frame, so it just doesn't make any sense to buy above that. And seeing this pullback, that makes sense. So seeing a little bit more of a pullback here on soybean meal, maybe to retest these lows, would be likely to kind of catch the rally back to the upside. We are, once again, on soybean meal, just like soybean, seeing those deep corrections back down, and we may be looking for a low wedge test instead. Drop that out of the way. Now, as always, you know, looking over the news for tomorrow, and while we're looking over the news, if you're in the chat room, feel free to type in a market. We'll take a look for it and analyze it for you. But looking at the news for tomorrow, we have we actually have some stuff this time, right? One of the biggest problems that we've been running into all this week is that, well, we just don't have any news, at least for the U.S. session. This time around, we actually do have something. At 4:30 out of the UK, we have construction PMI for March forecasted at 51.2. At 5 o'clock out of the Eurozone, we have the CPI for March forecasted at 1.4%. Of course, we have the ADP non-farm employment change at 8:15 for the U.S. session, forecasted at 205,000. At 10 o'clock, we have the ISM non-manufacturing PMI for March forecasted at 59.2. And then tomorrow is Wednesday, and that means that it is crude oil inventory day, forecasted at 1.667 million. When it comes to the API versus the inventories, I always like to take a look at what's going on. And if we look at the news for today, and get this filter off here so we can see everything. We do have the API report coming out later today at 16:35, or 16:30. That's 4:30 p.m. Is when we have the API weekly crude oil stock report come out. That's right here. And generally what I want to see is what are they looking to do with this, right? The API number does tend to be quite a bit more accurate when it comes to the crude oil inventories, and just having the edge of knowing what the API is and comparing it to the inventories can give you a huge advantage. So we definitely want to keep our eyes out for that at 16:30 later today. Let's drop this out of the way. Not a lot in terms of news, but we do at least have something going on, so we'll take it. It's better than nothing. Looking over the list, I'm not seeing anybody typing anything in, which is fine. We'll take a look at some of the other stocks that kind of have my interest here. Now, in terms of the overall movement that we're getting, I mean, for the most part, one of the big ones, Home Depot, I'm looking for a lift to the upside, right? We have a nice pullback, and it is getting a little bit grindy here. We're not seeing a whole lot of continuation, and really what I'm looking for, this is my, I just took a shot in the dark, butterfly long, really low risk, low probability, but potential for a huge reward. I've got my order kind of hanging out there. But really what I'm looking for is for Home Depot to catch a little bit of a base here and catch a pop up. Now, my price objective is over here at 195, but that's not really what I'm looking for. What I want to see is a price pop up to, you know, 185 or so. 190s would be really nice. I mean, if it does go to 195, I'd be pretty happy with it. But Home Depot definitely still looking pretty cheap. They're grindy to the downside. The sellers, they're not able to get anything done. Every time the sellers try to come in, the buyers just snap it right back up again, and we're kind of left with this back and forth gross looking garbage that we have right now. Looking for a bounce here on Home Depot over the long run. A couple other ones that might stand out a little bit here. If we go through some of the big names, right? Tesla obviously getting some bouncing and getting some interest in general. Tesla, you know, has some major support at 259.74, and we were talking about how Tesla is. It's in a situation where, you know, they're pulling back with a decent amount off the top. You know, when we're looking at those types of corrections, I want to find some support 25% off the highs, 50% off the highs, 70% off the highs, right? Give me some sale pricing that we can really jump into, and that's kind of what Tesla's giving us. We have a nice dip down to major dip support, and that's about 25% off of the highs, and that's at 259.74, and buyers are definitely reinforcing this area so far. The last time Tesla tried to dip through that low, didn't do so well before popping right back up again. Now, the overall movement, you know, if we zoom out a little bit, we were talking about this yesterday, how it wouldn't be a surprise at all to see a slightly larger corrective phase down, which could put price all the way down near 200. And I wouldn't mind that either. But right now, in the short term, Tesla not looking too bad in terms of price points. Nice discount off of the top. Twitter was also one that we were talking about yesterday. I'm looking for them to kind of push down and fill that gapping area. The gap they left behind back here is at 26.91. You can see I have an alert resting there. We also have another gap that's just below that right here. So we have kind of a multiple gap fill, and I still, looking at Twitter, it just looks like a sympathy pullback with Facebook just getting kind of smashed around a little bit. So I'm looking for a little bit of a bounce here and trying to catch a lift back up on Twitter if we can start dipping below 26.91 or so, trying to get some of those better prices. One that is a little bit more recent on the list, Dropbox, DB, what is that, DBX? Yeah. DBX. Let's try that again. We have a lot of back and forth. Dropbox, the IPO just launched not too long ago, and we have a good amount of back and forth. So far, not a whole lot of consistency on a faster time frame. Keep in mind, we're looking at a daily chart here. It's only been open for 1, 2, 3, 4, 5, 6, 7 days now. So a little over a week in terms of trading. Well, actually a little bit under a week because that first day didn't open up until like 11 or 12 o'clock. So, you know, the move that we're seeing right now, honestly, the way that this looks, I would really love to see a dip below that low at 27.75. That would be a big area of interest for me trying to buy it on the cheap. The highs are at 34.37, so that would be a really nice potential area. I'm going to put an alert on that, create an alert with a drawing. So that way we can kind of keep an eye on it. But that's the area that I'm looking for, is 27.75. Now, we were doing another thing as well, where if we take this drawing and put it up on the highs, we can utilize this by setting it to 0 and saying, okay, you know what, from 0 to the overall highs, where are the discount prices, right? That's where we really want to be looking next if it is going to start pulling back. And the discount prices after that are all the way down at 17.18 or so. Now, 25% could be an area of interest if we add that to the list here. Let's get rid of, we don't need any of these. Let's just do 0.25. And that's going to be at 25.78. So, I mean, you can kind of see we're starting to stack up areas of interest here that could potentially give us some nice bounces on Dropbox. So Dropbox on a dip to the lows. Buyers are obviously not that interested in the highs, so I would prefer to see it buying at the lows. 27.75 is the first area of interest, and then, of course, the one that we just talked about, 25.78 below that. Halfway decent movement, though. Now, it's kind of interesting. One thing that I like to do with these, especially new IPO, I mean, it just launched 7 days ago. Instead of looking at a daily chart, zooming in a little bit closer and saying, you know what, maybe like an hourly chart will give us a little bit more to work with, right? That will give us something to potentially sink our teeth into, maybe, maybe not. But, you know, at least this, we can see there is a little bit of a kind of line in the sand. We have a rising level of support from A to B. They held C for a little while, tried closing outside of it, and then immediately reversed back up. It's looking pretty good, you know, so getting a dip down to 27.75, we might not end up seeing it. We are getting a decent amount of rising support, and the buyers do seem to be defending it for a longer-term hold. To me, though, I would still rather buy in the cheap. I like cheap prices, what can I say? So we've got that one locked and loaded. Some of the other ones, let's look at the default list here. Google, of course. Oof, man. Google is in, I mean, right now Google's in a big area of interest. It's hard to ignore this area with these lows coming across. Every time the markets dip down here, the buyers have bought into it. And this is no exception. The buyers are buying into this one as well. So potential for a little bit more continuation to the upside here on Google doesn't look half bad. You know, one thing that does kind of stand out, though, is that we have an open gap back here just on Google for potential buy. So that area is going to be at 972.56. Put an alert on that one. Looking pretty good there. Over on MasterCard, symbol MA, we are running into a rising level of support, and we also have a little bit of a negative divergence. So if we look at this move up, it's in a very sturdy ascending wedge to the upside. We only have 2 presses on the top, looking for that third press, and right now we're running into rising support. They held it, failed to close outside of it, failed to close outside of it, and then again today, they're failing to close outside of it. If we look over at the SMI, the Stochastic Momentum Index, we can see that there is a deep correction down, but in price, well, that's not the case, right? This over here, swing low, that is higher, but this is lower. So we're seeing what I generally like to call a swoop. We went from straight overbought above all the way down, and all in one shot, really. I mean, it's chopping around a little bit here. But for the most part, MasterCard honestly isn't looking that bad. But the big thing that we really need to see here, that I would really like to see, is a strong bull bar. You know, give me a strong bull bar that's showing wick on the bottom like this. You might have my interest. Right now, we're still maintaining bears. That's not really what I want to see. I want to see a strong bull bar, something that looks like this with a wick at the bottom. You know, if we could get this current candle to close on its high today, that would be huge, because that's going to give buyers a lot of confidence going into tomorrow's trading for MasterCard for a lift up. And that could potentially lift all the way back up towards around 183, 184. There might be a lot of leg to the upside on something like that. So MasterCard is looking okay, but I think we need a little bit more of a bull candle to kind of prove what's going on. Not really much going on in IBM. I prefer more obvious lifters, I guess is the way to put it. Cycle back a little bit here. Netflix is obviously catching a pretty big dip off of the highs. We're embedded a little bit. You know, we had a pretty deep correction to the downside. We're stuck at the lows, trying to find a little bit of buy lifting to the upside. Big area of interest is going to be the low of where that big bull spike started. And that also lines up with the previous swing high. So everything kind of stacking up in an area of interest right now. And the same thing here as MasterCard. I want to see a strong bull bar that actually triggers. We had a beautiful bull bar there, but it never made it above it. Right? I want to see a strong bull bar that gets buyers above it and pushes the market up. We haven't had that yet. So a little bit of kind of chop and slop right now, but it is starting to tip a little bit for a possible rally to the upside. And here again, we have another situation of a negative divergence. Swing low, swing low, swing low, swing low. We have gone farther down. That could add even more emphasis to an upward lift here on Netflix. And then another one that was in kind of a nice area of interest is Morgan Stanley, symbol MS. And we're getting a nice pullback off of the highs. We had that rally to the upside. They broke above it, failed, retested the top as resistance. Next likely objective is going to go down and retest the lows. Makes sense, right? The highs failed, so let's give a shot to the lows. And the lows, I mean, you could mark it up like this. But for me, when I'm looking at a failure off of one side, I want them to go through the other side. So when I'm looking at this, I see high to high. That's the distance that they broke out. I want to see them break out that same distance on the lows, right? I want to see them break down to around 48.69. That would be a huge area of interest if we can get a rip down into that area, because now you're starting to deal with an equidistant breakdown, and that is going to be the level that I want to see. So 48.72 is that line in the sand that buying off of might not be too bad of a shot, depending on how the market looks when it gets down there. Amazon, we already talked about. Facebook, for me personally, I'm just kind of staying away from Facebook right now with all the fundamental stuff going on and fake news this and everyone hates everyone that and quit Facebook and blah, blah, blah. No, I don't like dealing with markets like that. Too much fundamental stuff going on. I would rather just let the market figure it out, and I'll come back to it when it figures it out. You know, long term, Facebook is one of those types of markets where, provided everything ends up checking out, right? We're looking at, through the lens of rose-colored glasses here. If everything ends up on the up and up, and Facebook is cleared and everything is hunky-dory and everybody loves Facebook again, this could be a great opportunity to buy in while it's cheap. That said, if everything does not end up hunky-dory, this might be what looks to be cheap now, might be hyper expensive if this comes crashing even further down. So when I'm looking at a market like this, I want to see, where was the all-time high? 195.32. It's a nice corrective phase off the top, but do I really want to be catching the falling knife? This is one of those types of situations where maybe buying small, maybe potentially picking up a few hundred shares, maybe a few thousand, depending on what your trading size is, and then holding on and seeing what happens. You might be able to catch a lift to the upside over the next coming months if news kind of starts clearing out, but it might go a lot further, and that's something that also needs to be considered with Facebook because of all the fundamental stuff going on. So for me, I would rather just stay away from it. I'm not a huge fan of Facebook right now. Another one that I would be a little bit weary of is steel. USS, United States Steel, symbol X. It's a tough one with all the tariff stuff going on. You know, when the tariff things were announced, that would have been a beautiful shorting opportunity off the fundamentals and driving the market down. But other than that, I mean, we really don't have any support until down here. And you can see I have my my alert on that rising support. If we zoom out, you can see where that's coming from here. That is a rising wedge or channel bottom coming into play. And man, if we can get a push down into testing that, that would be some seriously nice pricing at around 30 bucks. But again, it's moving a lot on fundamentals, and trading off of fundamentals, if you're not really you know, keeping track of all of the news outlets and everything that's going on, can be a little bit tricky. So it's another one that you have to play on the safe side. Of course, Apple, everybody's favorite, is also pulling off of the highs. 183.5 was put in. And we're now dipping all the way back to 166.85. Not that big of a dip, honestly, but it is hard to ignore the absolutely almost perfectly clear divergence at the top there before that pullback. I think a lot of traders may be looking and utilizing this low at the anchor point to buy a deeper correction, a 61.8, a 786, something like that. Could get you some nice pricing without having to break down through the lows. And that's one of the big things that I really like about picking up a 786 or something like that when it's nice and cheap, is that you can opt to go for a really... Why does this keep stopping? You can keep going for a really nice looking risk to reward. Right? So let's say as an example, you bought down here, they're filling in the gap. So you have a gap fill, you have support coming in at the 786. You could easily look for an entry around here with a small stop just underneath those lows, but a target all the way back up to the highs. So it's a really good looking reward versus risk. It's just a matter of, you know, accepting the fact that a trade like that is going to naturally be lower probability. If you're okay with that, that is a potential type of location that you might find some interest in. So I am definitely keeping an eye on Apple at around that 157 area, maybe a little bit lower, you know, but for the most part, that is going to be the pullback zone of interest. So I'll give everyone a little bit of time here. You can type in any markets you want me to take a look at, and then if nothing else shows up, we'll call it a day. Not a bad trading day by any means. For the most part, we actually had some pretty good moves today. Certainly won't complain, but you know, it does seem like the markets rode the struggle bus a little bit. Had a lot of back and forth and a lot of chop and slop, especially on the agriculture side of things. You know, looking at something like soybean meal, we had that nice rally to the upside, but then it gave all of it back, like we were talking about. Might just be a deep correction. Might be trying to put in a top. We'll have to kind of wait and see for something like that. But even the other markets, you know, looking at feeder cattle, there's just a lot of back and forth right now. You know, feeder cattle had that nice rally to the upside at pre-market, opened up at 10.05, and it's all the way back down to its lows, pokes a new low, tries to catch a rally up, fails, and now we're just getting pounded lower. Everything seems to be a little bit choppy, so you got to play it safe, try to get as good of an entry as you can on these types of days, because, man, if you miss an entry, you might be in some trouble. So for me personally, I only had 2 trades today. We had a trade on gold. I took a loss on the first one and then a win on the second portion. Ended up on the day like plus 10 ticks or something like that. But for the most part, really not a whole lot of action earlier this morning. Seems like, of course, everything kind of kicking off in the afternoon. All right, well, I'm not seeing any markets or anything coming in, so no problemo there. Not too bad, going on about 40 minutes here. Overall, you know, I think the big takeaway here is just looking at seeing what they want to do. We're in a lot of situations where we have to wait to see the confirmation. You know, with the euro, expecting a little bit of a bounce, potentially looking for some selling pressure a little bit further in, you know, around those previous lows, if they can get it, around that 23,485. Looking at some of the other ones, you know, the bonds easily could find a secondary leg to the downside, so can't really do much there until we get that information. Looking for crude oil to finish the bear cycle to the downside as well. Not much we can do there. Gold picking off that beautiful bounce at 33.3. It's going to be a little bit of waiting. It's going to take a little bit of patience going into tomorrow, but thankfully, we actually have some news for tomorrow, so it might help things move along. Like we always say, doesn't matter what market you're trading, whether you're trading gold, copper, crude, Bitcoin, doesn't matter. Always make a plan, trade the plan, follow those rules, and you're just fine. Until the next time, feel free to send me any questions or anything like that. Think of some markets that you want me to analyze when we go over these. We've been doing this every day, Monday through Thursday. Obviously, there's no point in doing it on Friday because Friday well, Saturday the markets aren't open. But aside from that, enjoy the rest of the day, rest up, and we will see you all tomorrow. Have a good one.